Tell us what impact the presidential election has had, mainly on the fixed income and forex markets.
Yeah, thank you, Lerato. I can tell you, Lerato, that we haven't seen any much impact of the presidential election result that was released yesterday on the market so far, largely because the result was as expected. There is no surprises from the result. The market expected that it's going to go this way, so that is why there's no reaction at all from the market. In fact, if anything, we expect that given that the election has been adjourned to be free, fair, and credible, we expect that the investors' confidence will be boosted, and that will result into more FDI coming into the market. And then we'll continue to see a positive development for the fixed income and then the FX market. In fact, currently what has been happening in the market, there has been a lot of improvement in the fixed income market. Yield has been dropping, and we have seen that prices are going up, not until when the inflation result was released yesterday, which was actually not too good from where we are coming from in February, and that we saw that yield has reverted again, going up, and then prices start dropping. On the FX market, yes, we haven't really seen any impact. In fact, if anything, the FX market has been appreciating, particularly on the interbank market, because of the inflows that we have received from the major oil companies. Thank you.
Talk to us about March inflation figures coming in at 12.8%. I mean, the CBN governor warned of this. He said too much spending ahead of the elections was going to have a direct impact on inflation, and hence the stance for monetary tightening. Are we likely to see further tightening?
Yeah, Lerato, I can say clearly that this is not unexpected, but the figure is quite surprising. Coming from 11.1% in February to 12.8% is quite high. You observe that in January this year, the inflation figure was actually at 12.1%, and as at February, it actually improved significantly to 11.1%. And in March, it went back to 12.8%, which is not good for the economy. Analysts has fingered the pre-election spending as well as increase in the energy prices as the major cause of this hike in inflation. However, it is too early in time to say what the CBN as well as the MPC is going to do, knowing fully well that the MPC meeting is still 1 month away from today. The next MPC is supposed to be in May 22nd and 23rd, so it's still too early to decide what the decision is going to be. You know that the inflation figure for the month of April is supposed to be out before that MPC meeting, and that will be a major determinant of what the MPC is going to do. Thank you.
Are we likely to see the bond markets respond in any way to this rise in inflation?
Definitely, Lerato, there is no doubt about that. Market has already reacted, like I had said before. As at yesterday, before the figure came out, particularly from last week, bond market has been improving. There has been a lot of activities in the market. But when the figure was released yesterday, we saw that the trading maturities actually went up by 3% across all the maturities. For instance, the 3 years, which was trading at about 11.5%, close at 11.99 today. And then the 5 years, which was trading at about 12%, 12.59, close today at about 13.005%. So there has been a reaction, and this is going to happen because this is going to have a serious impact on the auction that CBN is going to sell tomorrow on bond, particularly on the 5 years and the 3 years bond. Thank you.
The Debt Management Office finally, Momohjimoh, is set to auction about 70 billion naira in 3- and 5-year bonds tomorrow. Your expectations?
My expectation, like I have said earlier, is that market is going to price in this inflation rate. We're going to see an increase in rate by close to about 1%, because already market has adjusted by that level. So certainly we're going to see market pricing in what has happened to the inflation rate into the pricing they are going to quote at the auction tomorrow. Yes, CBN is going to issue about 35 billion of 30 years bond, and then another 35 billion of 5 years bond. And you know that this 3 years bond was issued at a coupon of about 10.5%, the last issue that was made by DMO, but we expect that it's going to close relatively about 11%. And the 5 years bond, which was issued at 12%, is also going to go up maybe about 13%. That's my expectation.